The second reason that a lot of investors keep cash around during downturns is because the downturns are when people get rich. The downturns are when you can buy stuff half off. The stock market is the only place on earth where people sell more when the prices are lower and they buy more when the prices go up. How many times have you ever gone to the grocery store and wanted the prices to be higher so you can buy more stuff because the prices are higher? Do you say, oh, the steak is double what it was last week. Oh, give me extra. Do you do that at the grocery store? No. When do you buy more? When the price is down, when they're having a discount, when it's on sale. Well, when the stock market goes down, basically America is on sale. America's on sale. McDonald's is a strong corporation that's going to always know how to print money. People will always be buying those toxic, unhealthy cancer sandwiches that they sell, right? You know what it is, right? People ain't gonna stop buying that. That company's gonna know how to make money forever. So that stock being priced less than what it normally costs is an opportunity if you want to invest in that game. Starbucks is always going to be able to sell their overpriced coffee because they're great at marketing. You will always have companies like Amazon that are tech geniuses that know how to literally infiltrate the entire earth, and eventually they're going to build spaceships and space stations and everything else. I invest in Amazon consistently because I don't care that Amazon stock went down this week. Oh, that's my opportunity to get in the game because I want my wealth to be aligned with Jeff Bezos' wealth because apparently that man knows how to make money. So ultimately, keeping cash is a good way to protect your portfolio during downturns because you can take advantage of opportunities. You have no idea how many people got rich during the Great Depression. But regular people don't get that message. Regular people have the impression that during the Great Depression, everybody was poor, everybody was broke, everybody was in a soup line, everybody was struggling. That is simply not true. The Kennedys got all their wealth during the Great Depression because if you're the one person in the room who has enough cash to buy distressed assets, then that's your opportunity to position yourself to take over the most valuable asset that a person can have. And I mentioned it this morning. Does anybody remember when I told you that you're the richest black people in the world because you own a valuable asset? What was that asset? The future. The future. When you buy now, you own the future. In the crypto space, when the whole crypto industry started falling apart and all these kind of shadily built crypto banks started going bankrupt, there's a guy named Sam Bankman-Fried who had a bunch of cash because he was a smarter investor than all his friends. This 30-year-old kid went around buying billion-dollar companies for $100 million a piece. And so he's going to control the future because he was waiting for the downturn to make these moves. Next, what's another way to protect your wealth during the downturn? There's something called diversification. Diversification is easy to learn. I'm explaining it to you in 30 seconds. Anybody have a grandmother that would say, baby, don't put all your eggs in one basket? That's diversification. That's it. Don't bet it all. There's a guy named Damon Dash that I used to bring on into my podcast a lot. And Damon's a nice guy. He's a smart guy, more flamboyant than me. I'm not quite like him, but he's a smart guy. He kind of helped create the whole Jay-Z thing, and he was behind Kanye's rise and all that.